Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. The Bangko Sentral is set to cut rates further. Infrastructure spending surges to 148.8 billion pesos in June. And in the United States, California Democrats push new maps to gain congressional seats. All that and more coming up. Let's take a look at how global financial markets performed overnight. Wall Street closed lower as investors turned cautious ahead of Federal Reserve Chair Jerome Powell's remarks at the Jackson Hole Economic Policy Symposium. Traders are hoping for clues on possible U.S. rate cuts in September after signs of a weakening job market. Adding pressure, big box retailer Walmart posted disappointing quarterly results, dragging sentiment.
In terms of whether Powell actually hint and give the green light, if you will, within his speech that they are going to go forward and make a cut, I have a feeling that most likely he will. He might not say it verbatim, but the signs are there from the data that you do have a deteriorating labor market. Inflation concerns are somewhat warranted, but it's been a while since we've had a rate cut. I think the majority of stocks, especially in like the home builder space and the small cap space, are relying on it.
The Dow Jones Industrial Average and the Nasdaq both slipped with 0.3%, while the S&P 500 lost 0.4%. Over in Europe, trading was mixed. London's FTSE gained 0.2%, Germany's DAX higher by 0.1%, and France's CAC 40 lower by 0.4%. The Bangko Sentral ng Pilipinas is expected to keep cutting interest rates, a move that could reshape the outlook for borrowing, investments, and growth in the months ahead, while aligning the Philippines with a global wave of monetary easing. In its latest note, BMI, a Fitch Solutions company, projects the BSP will lower the benchmark rate by 50 basis points to 4.75% by the end of the year, in line with other forecasts. The think tank cites weak first quarter growth and easing inflation as key drivers. BMI adds that the BSP has ample room to cut, with inflation slowing to 0.9% in July, well below the government's 2 to 4% target. Government agencies maintain a 94% budget utilization rate as of end July. This shows agencies are able to keep pace with higher fund releases, a crucial factor for driving public services, infrastructure, projects, and overall economic momentum. That's according to the Department of Budget and Management, despite the state ramping up its cash allocations. From January to July, DBM data showed notices of cash allocation reached 2.99 trillion pesos. That's up 9.09% from 2.74 trillion pesos in the same period last year. Government infrastructure spending climbed to 148.8 billion pesos in June. This surge highlights how public works remains a key driver of economic activity, with infrastructure outlays often seen as a catalyst for jobs, growth, and investor confidence. The Department of Budget and Management reports this is up from 139.7 billion pesos in the same month last year and 20.2% higher than May's 123.8 billion pesos. This rebound followed May's 9.2% annual decline. The DBM says that the increase came as public works disbursements resumed after the election ban was lifted in early May. The Securities and Exchange Commission slaps Villar Land Holdings with multi-million peso fines after failing to submit its audited financial statements. The case spotlights the critical role of corporate disclosure in protecting investors and safeguarding market integrity. Sujin Kim has this report.
The Securities and Exchange Commission is cracking down on Villar Land Holdings, led by ultra-Bilyonaryo Manny Villar and Senators Mark and Camille Villar. It was first revealed in the Bilyonaryo.com that the SEC denied the company's plea for an extension to file its 2024 annual report and first quarter 2025 report. Officials rejected claims that audit disputes over Villar City caused the delay, stressing deadlines are mandatory and non-negotiable. Villar Land was given multiple extensions until June 30, yet still failed to deliver. SEC records show Villar Land had already disclosed in a March 28 report that its board approved the release of its 2024 financial statements, even as the audit was still unfinished. The commission flagged this as misleading to investors. The company reported fair value gains of 1.33 trillion pesos in 2024, ballooning assets to 1.37 trillion from just 28.6 billion a year earlier. That revaluation sent net income soaring to nearly 1 trillion pesos from only 1.46 billion in 2023. The SEC ordered the company's directors and officers, including the Villar family, to pay 1 million pesos each or 12 million pesos in fixed fines. On top of this, daily penalties of 2,000 pesos per officer, totaling 24,000 pesos a day, which have already reached 1.24 million pesos as of yesterday. The commission warned, this isn't just about fines. Villar Land and its directors have 10 days to explain why they should not be held liable for violations of the Securities Regulation Code, the Financial Products and Services Consumer Protection Act, and the revised Corporation Code. The SEC said it opted for fines instead of suspension to avoid directly hurting retail investors. The order makes clear Villar Land is under pressure to clean up its reporting or face escalating penalties and possibly civil or criminal charges. In response, Villar Land said its directors and officers welcome the opportunity to explain their side on the issues raised and will respond to the SEC's order in due course. They added that the delays stem from additional audit procedures demanded by its external auditor. Villar Land said that while it believes the fair value of Villar City properties should be reflected, it reluctantly agreed to a cost basis to speed up the release of its 2024 financial statements. SEC Chairman Francis Lim says they will continue with the administrative due process to keep the integrity of the stock market. Sujin Kim, Bilyonaryo News Channel.
TikTok is pausing all real money gambling ads in the Philippines starting today, a move that marks a big shift in the push to regulate online gaming and create a safer digital space. The decision follows growing concerns over online gambling, with the Department of Information and Communications Technology calling it a big step toward a safer digital environment. TikTok says it remains committed to working with Philippine authorities to promote a positive platform experience. Its policy had allowed gambling ads only under strict age restrictions and licensing requirements. But the full pause goes further than those rules. The Philippine Amusement and Gaming Corporation, or PAGCOR, says it has no plans for now to lift its moratorium on new online gaming licenses, underscoring the tug of war between revenue generation and rising social and regulatory risks. PAGCOR Chairman Altenco says that they will first review if there is a need to lift the ban. There are already more than 70 licensed online gaming sites and applications, including Arena Plus, Playtime, and Bingo Plus. Despite the freeze, online gaming remains PAGCOR's biggest revenue driver. It expects to generate over 116 billion pesos this year, with about 60% coming from the sector. The Bureau of Customs has destroyed 5 containers of smuggled agricultural products at the port of Subic, a move that speaks to the broader battle against food smuggling, which undermines local farmers, distorts prices, and poses health risks to consumers. The shipments, which contain frozen meat, fish, fruits, and vegetables, were forfeited for lacking phytosanitary certificates, in violation of agriculture rules and the Customs Modernization Act and the Tariff Act. Authorities declared the goods hazardous and unfit for consumption. Some senators are calling for a bigger budget for the Department of Tourism, saying that the country needs stronger visibility in foreign markets to compete regionally. At a Senate briefing, Tourism Secretary Cristina Garcia Frasco revealed that the DOT's branding and promotions budget for 2025 is just 100 million pesos, slashed from 200 million in 2024 and 1.2 billion pesos in 2023. Tourism Committee Chairman J.B. Ejercito and member Rodante Marcoleta both voiced concern. Marcoleta warned that the cut may have been politicized, saying tourism promotion should be kept above politics. Ejercito added that the funding drop puts the Philippines at a disadvantage against Southeast Asian neighbors that are aggressively competing for global tourists. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Let's check on how Asian markets are moving this Friday morning. Right now, the Nikkei 225 is in the green, flat with a slight upward bias, up by less than 0.1%. Hong Kong's Hang Seng Index up by 0.4%. Shanghai's Composite up by 0.3%, and Singapore's Straits Times Index up by 0.3%. Here at home, the Philippine Stock Exchange was closed yesterday in observance of the Ninoy Aquino holiday, but trading has since resumed. Over the short term, investors are expected to trade cautiously ahead of the Bangko Sentral ng Pilipinas' policy meeting on August 28th, where a rate cut is on the table. Markets are pricing in 2/4 point cuts in the second half of this year, a move that could shape borrowing costs, investment flows, and growth momentum in 2026. Taking a look at the PSC index right now, as of 10:19 this morning, the main gauge is in the green, higher by 0.2% to 62.91. All shares index up by 0.2% to 37.42. As for the sub-indices, we're looking at a mixed picture. The financials and mining and oil counters are currently limiting the market's advance. Total volume traded is at 161 million shares, valued at 1.26 billion pesos. Now, market breadth is positive, with 74 advancers, 57 decliners, and 38 stocks unchanged. Taking a look at the currency markets, the peso opens at 57.15 to the greenback, weaker than the previous close of 56.96. The Department of Information and Communications Technology is studying whether the mothballed Bataan nuclear power plant can be converted into a hyperscale data center, turning a symbol of the past into a possible cornerstone of the digital economy. The move reflects the Philippines' push to become a prime destination for global tech giants. DICT Secretary Henry Aguda says the site offers strong fundamentals for a large-scale data center, with other locations also under review. Data centers have become critical infrastructure worldwide, powering everything from cloud computing to artificial intelligence. Telcos and independent operators have been pouring billions into new facilities, locally betting on soaring demand from cloud providers, fintech firms, and multinationals seeking an Asian base. Now, the Philippines is grappling with a housing backlog of more than 2.2 million units, a shortfall that grows each and every year. The government's Pambansang Pabahay para sa Pilipino program aims to deliver 6 million new homes by 2028, but the mission is unfolding amid slower economic growth, high construction costs, of Human Settlements and Urban Development to discuss where the business opportunities are, how the private sector can help close the housing gap, and what it will take to deliver affordable, safe, and sustainable homes at scale. Good morning, sir. Thank you for being here with us.
Good morning.
Okay, talk to us about the affordable housing sector in the Philippines, sir. Where would you say it is right now?
Right now, we are still getting our developers to construct more socialized housing. There has been a backlog that was started many years ago, but unfortunately, in the first 3 years of this administration, we were not able to produce as much housing. Recently, we have recalibrated those targets, and we aim to complete and finance as much as 1.2 million houses by the end of this administration.
When we talk about the affordable housing space in the Philippines, we talk about it in the context of the entire administration. So the 6-year terms, So we've got 3 years left. We're at the halfway marker. How far are we right now from where you would like to be?
Yes, so far we have completed 425,000. So we still have about 800,000 to complete by 2028.
And there was a change in secretaries here from Secretary Jerry Acuzar. He had the goal of 6 billion by 2028. Now we have Secretary Aliling. How has the trajectory of this agency changed since? The trajectory and the priorities?
Yes. When we started the Pambansang Pabahay para sa Filipino program in 2022, we were concentrating on vertical housing. That meant that most of the houses were either 4 stories, 5 stories and above. Unfortunately, it takes a while for many of these projects to be completed. Second, we felt that these units are unaffordable and cannot be sustained given the higher amount for purchase values. So when the new Secretary Aliling, started 2 months ago, he recalibrated the program with the approval of course, of our President. And now we expanded the vertical housing to include horizontal housing. We're also reviving the community mortgage program, which allows us to acquire the land where many of the informal settler families are occupying. We've also revived the issuance of the certificate of eligibility to previously proclaimed areas. We have also started a program on rental housing for those who cannot afford to purchase. So this is the expanded program that we have started just 2 months ago.
Okay. Sir, when you talk about the prices in this segment, what are the purchase prices for a house and lot, and how much is the purchase price for a condominium in this affordable space?
Yes, currently the price ceiling for horizontal or house and lot units are 850,000 and below. And for condominium, it is at 1.8 million and below.
Mas mahal ang condominium talaga.
Yes,
sir.
that's the reason why we had to recalibrate, because despite the fact that we are providing support, it's still very difficult for many of our Filipinos to afford a 1.8 million condominium vertical housing.
Yeah, and as I understand, and correct me if I'm wrong, the broader problem of the agency, as with any agency, is funding. But when it goes down to really what's on the ground, the problems on the ground in this sector, it's affordability and the availability, the production, the number of housing units we can provide. Would you agree, sir?
Yes, fully agree with that. Right now, we are only getting as a sector-based budget from our government appropriations only about 6.5 billion pesos. This includes already the budget for the department as well as its key shelter agencies.
So that's for the whole sector, 6.5 billion pesos.
Yes.
It sounds like a lot, pero kulang pa rin, no, sir?
Yes. Next year, the targeted national expenditure program actually has a lower budget than this year. It is only being projected at 5.5 billion.
Why the decrease?
We have to compete with the physical space available in the whole government. So there is need to prioritize. So different agencies would compete for budget, and that's how we eventually arrive at our number.
Of course. And how much of a budget did you request for 2026? In 2025, the budget you received was 6.5 billion. In 2026, the budget you are expecting to receive on the table, it's about 5.5 billion as Congress debates that now. How much did you actually request?
The whole housing sector actually requested 225 billion. But we're only being allocated 5.5 billion next year.
What can you do with that, sir, especially within your agency?
Right now, we really have to tap the private sector to help us. Given the limited funds given to government, we have to encourage and to make it available to the private sector for them to be incentivized so that they will participate in producing the housing requirements that what we currently need.
With a budget like that, how would you describe that budget, that 5.5? How would you describe that, sir? Is that for you? Is that a minuscule amount? And what can you do with that?
Yeah, basically the budget will dictate the amount of houses that we can actually construct. This is from the government side. For example, in the case of NHA, they are being allocated 2.2 billion only. So based on that 2.2, they can only do approximately 2 to 3,000 units if we equate it at 850,000 per unit. So that already indicates to you the number of units that we can construct.
Yeah.
Thus, we have to depend on the private sector to participate. Luckily, with the recalibrated program of Secretary Ping, we were able to get commitments from the private sector to develop 251,000 units in the next 3 years. This will substantially augment the requirements needed for our socialized housing program.
This is a challenge that both the government and the private sector take on. From the government side, we've got the NHA, the National Housing Authority, and we got the SHFC, the Social Housing Finance Corporation, creating the homes. And then there's the private sector also. What's the mix? What's the mix? How much does the government produce, and how much is expected of the private sector in an ideal situation, and what's happening now?
Yeah. In an ideal situation for socialized housing, we really would need the government to come in. But given the budget that we are being allocated, we really now have to depend on the private sector to participate. However, given the concerns, we have to provide incentives. And these incentives are actually the reason why we are addressing now the commitments. No? Let me use an example. The interest rates before by Pag-ibig for socialized housing at 850,000 is at 6.25%. That means a borrower will have to pay 5,200 per month. Just recently, last month, the board of Pag-ibig approved lowering that interest rate from 6.25 to 3%, thus reducing the monthly amortization to 3,500. That is about a third of decrease in the monthly amortization that they have to pay.
Yeah, that's a big step.
That is a big step.
Because affordability is a key challenge in this sector. And sir, as interest rates are headed lower, we're expecting 50 basis points, 25 in the second, a cut of 25 bips in the second half. Bab, how much do you expect that 3% to decrease?
Right now, we're still working on that number, but fortunately, our budget also been provided with an interest subsidy. This interest subsidy, although not big, will still help out in bringing down the monthly amortization.
Yeah.
So from 3,500, if we're able to get a continuation of that interest subsidy, that number can still go down to 2,700 per month. That is effectively almost a 48% cut from the actual amount that they have to pay a month ago.
Ideally, by the end of this administration, where would you like to see that interest rate, sir? From 6.25, now 3%, where would you like that interest rate to be in order to be able to make housing more affordable in the Philippines for this sector?
Yes, we of course prefer that it goes lower. But right now, what we've done is Pag-ibig has come out with a program for the first 30,000 borrowers that they will provide 3% interest for 10 years. Previously, what they would do, they would have an interest rate only for 5 years. And then depending on the status of the borrower at that point, then they will recalibrate the interest rate.
Yeah.
But now with the new program, we were able to get Pag-ibig to approve a program that will allow low interest rate for as high as 10 years.
Yeah, and Pag-ibig is really the lender in this space. The private sector, they're scared because, you know, it's a challenging market to loan to. So everybody looks to Pag-ibig. Can you talk to us about the role? How big of a role does Pag-ibig play in financing in this sector, sir?
Yes. Pag-ibig is basically a provident fund, but its mandate also requires that more than 70% of its fund be allocated for housing. Today, Pag-ibig has over 1.1 trillion in assets, and about 871 billion of that is actually allocated for housing loans. So that's a huge sum of their total asset being allocated now for housing loans.
So if the private sector were to come into this space, what would your ask for them be? Where would you want them to see develop homes? Would you want them to focus on vertical or horizontal? Maybe vertical because it's the most expensive. And where is the need for housing in the Philippines, sir?
Okay, we would want to allow them or want them to come in the house and lot category. This is basically the need And at the same time, this is where many of our socialized housing category affordability level is. At the same time, we would want to see many of these developments come in the Central Luzon and in the Calabarzon area.
Yeah.
These are the areas very near Metro Manila.
Yeah,
the
because
growth
they need to
zones.
be high growth, and at the same time, the property prices need to be affordable, low enough that the prices can be attractive.
Yes, and these are the areas also very close to where their work are, so there will be no displacement. The cost of having to move from their house to their work areas now will be reduced. So many of this will come into play when we have developments very near Metro Manila.
By 2028, sir, by the end of this administration, where would you like to see the supply and demand picture when it comes to affordable
Well, we would
housing?
hope that the gap would now be narrowing. We know that this is also partly because of the demand, but hopefully with the awareness to increase budget for housing, we hope that that gap will be narrower by the time we reach 2028.
And for the private sector to really join in the national housing push, are there new incentives being offered for developers? Maybe reduced development loan assistance. What incentives are you providing the private sector to come into this space in a more, in a more meaningful and in a game-changing way?
Just like what we've done to the end users, we're also bringing down the interest rates to developers. Pag-ibig is taking the lead now. Pag-ibig has lower interest rates compared to the commercial banks. At the same time, we've also extended the period of payment. Recently, Pag-ibig approved the rental housing program, which would now allow developers or entrepreneurs to provide rental housing at a more affordable monthly rate to our low-income groups. Incidentally, the interest rate being given for rental housing loan is now at 3% and payable over 30 years.
And beyond affordability, we also need to make sure that these communities, these housing communities, are livable, conducive, convenient, and just nice for the families that live in it. What are you guys doing to ensure that these communities thrive?
Yes. Basically, we're not limiting our development to just the houses. We're now looking at livable communities. By livable communities, we are providing support to infrastructure, to the roads, to the open spaces, to the common facilities and the like. We're also talking to agencies like the ICT to provide free Wi-Fi in the area. So these are the things that would complement and make the properties more livable than just having a roof on the
especially
head
Wi-Fi.
of these families.
That's like a basic utility nowadays. Okay, sir, what's your outlook for the sector in 2026 and beyond?
We are very glad that with the recalibrated, expanded 4PH program, we're getting a lot of interest from the private sector, and we do hope that they continue with that promise and deliver by 2028.
Hopefully, everybody needs a home and a good one too. Thank you so much for your time, Mr. Yap.
Thank you very much.
All right, we're taking a short break. Business 360. We'll be right back. Welcome back. SM Prime Holdings is postponing the initial public offering of its planned real estate investment trust to beyond 2026, a move that underscores how volatile market conditions continue to weigh on capital raising in the Philippines. The property developer, led by the ultra-Bilyonaryo C family, cited unfavorable market conditions. Chief Finance Officer John Naipeng Ong also noted that liquidity concerns must be taken into account. The Philippine Stock Exchange is targeting 6 IPOs this year, but only one has materialized so far. Cebu-based fuel retailer Topline Business Development Corporation last April. The delay highlights a broader trend. While investors remain cautious, companies are exploring alternative funding routes. Ong said SM Prime is looking at green financing as part of its capital raising strategy aligned with sustainability goals. Prime residential prices in Manila jumped 9.1% in the second quarter, one of the fastest climbs in the world. Knight Frank's Global Cities Index ranks Manila 5th worldwide for luxury price growth. But that's a far cry from the 26% surge a year ago when the city was number 1. The slowdown shows how high-end markets are cooling after pandemic-era spikes, even as demand for luxury homes remains strong across Asia. Knight Frank tracks prime prices in 46 cities, measuring gains in local currencies. Demand for office space in the Philippines jumped 56% in the first half of 2025, making it the second fastest growing market in the Asia Pacific and signaling a stronger than expected recovery in the country's business landscape. A study by Colliers shows the Philippines is now catching up to Singapore, which led the region with a 12-fold surge in office take-up. Net office demand here reached 96,000 square meters, already 60% of the full-year target. Companies are shifting toward prime, sustainable spaces that match their long-term goals, with 70% of occupiers expanding or setting up new offices. More than half of the demand is for smaller spaces under 1,000 square meters, while 36% involves whole floors. Business leaders are raising concerns over a flood of low-priced cement imports from Vietnam, warning that the surge is squeezing local manufacturers and threatening industry jobs. Sujin Kim has the details.
According to the Cement Manufacturers Association, local output already reaches 50 million metric tons, well above the domestic demand of only 35 million. The industry now questions why imports are still coming in.
Vietnam is dumping all of their cement into the Philippines. You have to understand there is oversupply of cement in Vietnam because in the last few years they have been heavily industrialized. So there is oversupply and they have to sell it immediately outside. So they have become very cheap. We can produce all of the demand that the Philippines need.
Vietnam cement imports are at least 30% cheaper because of their heavy government subsidies.
Are you aware that the power rate in Vietnam is only 2 pesos per kilowatt? Whereas the power rate in the Philippines for the manufacturer is above 9 and reach 9.5. Also, income tax holiday that is given to these manufacturers, we cannot expect to be given this right now.
Executives point out if even part of the 1 trillion peso flood control budget over the last 3 years had been used instead as energy subsidies, the impact on local industry would have been greater. The cement producers' call imposed tariffs on Vietnam imports.
If you look at our neighbor, Taiwan, they have instated a 23.5% tariff on Vietnam cement to protect their local industry. So we can use this as a framework. Diba? If our neighbor Taiwan is already doing it, maybe we should also protect.
For now, a 200-day provisional safeguard duty is in place while the Tariff Commission deliberates on a permanent ruling. The industry hopes safeguard tariffs will be formalized and that DPWH contracts will be required to use local cement.
Government should be the one now to procure from the local cement manufacturers. Do not leave this now to the contractors. Government should turn this into OSM. So government can directly buy the cement na and tell the winning bidder, okay, you use this. Para siguradong local ang binili. And then if government negotiates with the manufacturer, I'm sure fair price will be given.
Trade Secretary Cristina Roque was quick to respond, stressing that DTI is fully backing the industry's trade remedy petitions. She said the government is also supporting modernization programs to reduce power costs. Roque added that the DTI is working with industry to enforce local preference provisions in government procurement. Sujin Kim, Bilyonaryo News Channel.
Carmaker Ford Philippines says it is probing a viral post involving one of its models, even as it navigates policy changes and gears up for the shift to electrified vehicles. Our mobility correspondent, G. Baroga, has the details.
Isolated incident. That's Ford Philippines' official line after a territory SUV caught fire, with an image quickly going viral on Reddit. Weeks later, the company still doesn't know what caused the fire. But Ford Philippines' managing director Pedro Simoes doesn't appear too worried, saying they're investigating but also eager to shift the conversation toward the company's growth plans.
We don't know yet exactly what caused in this case, but we are investigating to make sure that if there is anything that needs to be corrected, we will be the first ones to come out and help with the customers to make sure that they remain safe.
Despite the lack of answers, Ford remains focused on navigating a wave of new policies both at home and abroad. As an American brand, one development is the move to drop tariffs on U.S. imports under Trump 2.0. Simoes says it all comes down to the fine print.
We need to see the details exactly to see how we will potentially open new opportunities or not for us at Ford for products produced in US that could potentially be of the interest of the customers in the Philippines that might be out of price range today.
There's also some movement in its pickup models, especially for the Ranger, with the lifting of excise taxes under the capital markets official.
Arrival of the hybrid version of the Territory SUV, which also made its global debut right here in the Philippines, and also the Mustang Mach-E, the first SUV in the Mustang family.
And there's more where that came from. Ford says they're ready to roll out more electrified vehicles in the future, but that depends on how the local market shapes up.
How the market is going to evolve, how the customer is expecting the adoption, the adoption of the electrified products, as well as the infrastructure development in the country that will tell us not only what type of products we can launch in the future, but also what type of technology can we introduce with those products.
With a promising start to Ford Philippines' electrification journey, Simoes is feeling good about what's ahead. For BNC Mobility, G. Baroga.
We're taking a short break. Business 360 will be right back. Welcome back. U.S. President Donald Trump visited uniformed personnel in Washington on Thursday, part of his campaign to project a hardline stance on law and order, a theme central to his re-election strategy. He thanked them for carrying out his crackdown on criminality. Trump has taken control of the city's police department, blaming a crime wave. But local officials pushed back, pointing to federal and city data showing violent crime has actually dropped sharply since a 2023 surge.
And I just think it's such an honor to be with you. And we're going to make Washington, D.C. great again. We're making our country great again. The country is very close to being great. When they say it's the hottest country in the world, they mean it. And this Capitol is right now, after 4 days, 5 days, it's at a level that you haven't seen in a long time. And it's all because of you. So I want to thank you all very much. It's an honor to be with you.
California Democrats, led by Governor Gavin Newsom, are rushing to pass a redistricting plan through 3 bills just in time to put their proposed new map on the ballot for a special election this November 4th. The plan could give Democrats 5 more seats in the U.S. Congress, part of a wider power struggle as both parties use redistricting to lock in advantage ahead of the 2026 midterms. In Texas, Republicans are advancing their own map aimed at boosting President Donald Trump's partisan edge. California Democrats insist that more than 70% of their new districts are based on existing maps drawn by the state's independent commission.
Well, thank you, Mr. Speaker Pro Tem. Californians, we believe in freedom. We will not let our political system be hijacked by authoritarianism. And today we give every Californian the power to say no to Donald Trump's power grab, and yes, to our people, to our state, and to our democracy. Mr. Speaker, I proudly ask for an aye vote.
Nonprofit organizations across New York City are reporting a surge in demand for rescued produce or food that would otherwise go to waste, but is being redirected to communities in need amid rising pressure on food security. The jump comes after cuts to federal food assistance programs. Both new organizations and longtime partners have been relying more heavily on food rescue networks, leading to greater volumes of produce being redistributed each week.
Anybody that was receiving any kind of funding is kind of scrambling right now. So we're really trying to work to strengthen our own supply chain and increase what we are receiving so that we can add on more organizational partners.
And while the demand is growing, so is the response. A reminder that even in challenging times, communities can come together to fight hunger, reduce waste, and make sure good food reaches the people who need it most. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us. Keep it here on BNC, the Bilyonaryo news channel, and have a good long weekend.